We were mentioning before the break that we've seen the price of oil slide by upwards of $20 a barrel since late September. Now, there are some lingering questions about what kind of demand picture we'll see if the economy cools. We had some news out of China today that also left investors feeling uncertain. And then on the supply side, we keep hearing about the back and forth amongst OPEC Plus members on what the production picture looks like and who might move. We'll learn more about their plans later this week, but let's get a preview of that and more on what's happening in the oil sector. Rebecca Babin is Managing Director and a Senior Equity Trader at CIBC Private Wealth. Rebecca, nice to have you back with us. Let's start with the key things to be watching for this week. So OPEC Plus members, they were supposed to meet. That got delayed. There seemed to be some disagreement. What has been the disagreement within that group?
That's a great question. So the disagreement is around the baselines for 2024. Right now, Angola and Nigeria are expected to decrease their baselines, and that has definitely caused some friction within the group. They had committed to doing it in June of last year, but they required an external audit to actually confirm that they'd been missing their production quotas and that they don't have the capacity to meet them. Part of their cuts came because they were so frequently not hitting their quota numbers. Now they're challenging the results of this audit, and they really don't want to see their quotas go down, and they don't want to see those quotas go down and then have to take further cuts, which I believe is what Saudi Arabia is really angling for in this meeting. They're going to say, hey, we'll roll over this 1 million barrels that we have voluntarily taken on our back. But guess what, guys? You're all going to need to participate more in these cuts to stabilize the markets. And they kind of use that lollipop cut, which I now think they're using as a whip to whip these guys in line, saying, hey, I could bring those back and you could be looking at $60 crude. So do you want to cut a little bit and keep prices stable around here 80? Or do you want me to bring back my barrels and you look at much lower prices? So it's kind of the lollipop versus the whip here. It's around these African quotas in Nigeria and Angola. And then the UAE has been really, really adamant. They have fought for increasing quotas for a very long time. They're supposed to go into effect in 2024, and I bet there's some pushback about their increasing quotas as well. So there's a lot of challenges, clearly, but I really think that they're going to reach a compromise. I think they roll forward their cuts, and I think they actually do get the rest of the members to cut deeper.
And the cuts would be intention for getting the price of oil trading around what range? Like if you're Saudi Arabia, what's the sweet spot for crude right now?
So the market talks a lot about the OPEC put, and that is apparently struck at 80. And every time Brent has fallen below 80, which it is right now, we've seen action out of OPEC. It seems to be the line in the sand. It seems to be the price that they've wanted to defend it. It's also where I think most of their fiscal budget is balanced. So I think that's the hot button price where people are focused on. I don't know if they have that in their mind, but I clearly think it's where the market sees them coming into action. So it's interesting. Today, we do see crude lower, Brent below 80, and it's almost kind of testing them, saying, hey, OPEC Plus, do you really have it? Because we're going to test you and see if you're going to defend this price. And there has been this battle between the market and OPEC for quite some time. They really like to scare the shorts out of the market. And at the same time, the market likes to say, hey, we're seeing inventory builds. Fundamentals aren't where you think they are. We're going to press you here to do more. Yeah,
I'm glad you mentioned the inventory story because we get a lot of questions from our audience members, more so for energy stocks and investing in that group. But the oil price plays a role, obviously, in the short-term influence of equities. What is the demand picture at the end of the day for anyone who's trying to figure out what the demand picture for oil worldwide looks like next year? What's your best guess?
Okay, so for next year, the demand picture looks something like demand growth of 1.4 to 2 million barrels a day. 1.4 being your kind of more conservative estimate, and OPEC, who's at 2.2 of demand growth for next year. I think consensus is right around 1.6 million barrels a day of demand growth. The issue we have is we have supply growth of between 1.2 and 1.4 coming online next year. So it's very finely balanced. We don't have what we saw in 2023, where we had 2.5 million barrels a day, record demand growth in 2023. And we thought we'd only have supply growth of 1.5, 1.6. Guess what? U.S. completely outperformed on their supply metrics. Iran shipped more barrels. Brazil also outperformed. We didn't see as much of a deficit as we thought, so we didn't get as much of an inventory draw. Next year looks really tight. We're really going to need that play on OPEC to see if we can continue to get those draws. And that's what the market wants. It wants inventory draws to be convinced that the tape is going to go higher. And right now, supply and demand looks pretty even. It's going to take the swing factor of OPEC to push us into that draw.